Happy New Year, fellow investors! In this video I want to discuss the goals of this channel and why we make videos. We make stock analysis, investing education, market discussions, but the key of everything is that I firmly believe that value investing is the way to go to most surely reach your financial goals in life. And that is exactly what I want to discuss here, because when it comes to investing, the main mantra is just invest in stocks. Stocks always go up. And if we look at the S&P 500, yes, in the 1920s, for a decade, stocks did great. But that was followed by 20, let's say, terrible years where real returns were negative 70–80%. Okay, a little bit better with dividends. Then 20 great years, the roaring 1960s again, followed by 15 terrible years. Then again, 18 great years, followed by 10, even 12, 13 bad years. Now we are again at 15 great years, and I think that all of us during our investing life cycles will go through at least two of stock bull markets and bear markets. The only thing that works in all markets is value investing. And that is exactly why I want to discuss value investing and why am I so convinced about it. Because if just valuations revert to the mean, then we'll be looking at 30 years of nothing since 2000. So whatever comes next, value investing works. And the nice value investing book here, The Case for Long-Term Value Investing, it's an okay read, but the key factors are these. The data that it shows is how from 1968 to 1982, the Dow Jones was flat, value stocks were up 1,000%. Also, S&P 500 from 2000 to 2010, tech stocks, negative return, value stocks doubled. So that's just an indication of what value stocks can do, and over those cycles I'm saying that it is worth even to underperform the market during bubbles like the situation we are in now, just to avoid all those negative crashes, because even 55 years of zero returns from 1929 to 1985, real returns, okay, dividends and inflation, but that's it, dividends in inflation. And there are bear markets, bull markets, stocks only go up, Nifty 50, nothing can go wrong with markets, then you have crashes, etc. So how to do well no matter what is my main mantra. And that is why value investing works, because we focus on the different drivers of returns. Dividends, dividend potential, earnings, growth, owning businesses, how is the business creating value, and stacking those factors up, focusing on those, delivers value no matter what. That's the key. Because if you look at the S&P 500, it did great over the last 2 years, but the P ratio went from 20 to 30. That's a 50% increase in valuation. Earnings went nowhere. Dividend yields went down and the market went up, yes, 50–60%. That means that this jump is just due to the P ratio going from 20 to 30, just valuation expansion, nothing else. And to gain from valuation expansion, you must sell. So there is no other way to gain from that. To sell, then you don't know whether stocks will go up next or not. To own, to do what value investors do, then you look at the dividend yield, at the value creation, at the growth, at the earnings, at whatever. And that is the driver of your returns, compared to the price paid, of course. So when it comes to cycles, you will reach your goals if you're a value investor. You don't speculate, you invest for dividends, earnings, growth, and you do not gamble like Bitcoin. And that is why I want to focus on value investing education. And perhaps the key thing when it comes to value investing education is price is what you pay, value is what you get. And if you look at one stock that we discuss here on the channel, we'll soon update, so subscribe for that. Archer Daniels Midland. If you look at the stock over the past 5 years, it didn't do much. So many would say it's a terrible investment. But if you look at the dividend yield, it is 4%, 1.2 of the S&P 500. And now it is about what is your financial goal? How do you think you can get there? What will be better? 1.2% to get there or 4%? Maybe there are 8% dividend yields or 10% earnings yields. Those are different things. In this case, you have to see how ADM now with this yield fits your investment goals, plus growth from inflation likely. And then also on the education side, the value investing quadrant, we have reward here, so low reward, high reward, risk here, high risk here, low risk here, and then you can invest in a risk reward version. This would be a buy, this would be a sell, or you can simply, as value investors, eliminate risk, so not invest if the risk is not low. Very hard to do, but it still leaves you some options, like Warren Buffett is now in treasuries, for example. Value investing is not easy, that's certain, and that's why we have to continuously educate ourselves on. And something that's very different to Wall Street, to anything, business, to whatever, is the trick is when there is nothing to do nothing. On the contrary, some people constantly tell Warren Buffett, you are burning $3 billion a month, you should invest in Bitcoin, you should this, you should do that. But Warren Buffett has been used to that.
There's a problem with most professional money managers. If they try to sit out an inning or two, not only do they get somewhat antsy, but their clients will start yelling, swing you bum, from the stands, and that's very tough for people to do.
Thanks, Warren. And just an example of that, we'll analyze Petrobras and Exxon soon. And look at oil. Oil has its lows and also ups. And we are now in a, let's say, mid-range on a risk and reward situation for oil. Now, if you're a value investor, 1, 2, 3, 4, over the last 30 years, you had 4, let's say maybe 5 opportunities to buy oil on the cheap. And that's it. 5 in 30 years, you follow, 6 sectors that are diversified, and you will get 1 opportunity per year to invest. That's it. If there is nothing to do, you do nothing. And I've been through all these cycles, been investing since 2002. So I've seen the 2000s, the emerging market bubbles. I've seen the marijuana, Bitcoin, Cathy Wood, lithium, food stocks bubbles. I'm still here. I'm looking now at the Bitcoin insanity. I know that thanks to value investing 10, 20 years down the road, I'll still be here. Bitcoin, I hope for all of you invested, it will be there, but you never know. Just an example of these bubbles. Do you remember the weed boom there? I even made a funny video from Amsterdam how I'm going to test everything on the field, but okay, that was interesting. Look at the date here, April 19th, 2018. So the video came out here. Then the stock went up another 114% in the next few months. Every day here I got many messages of how I am an idiot. The rest is, of course, history with a total complete loss. Another stock, Beyond Sanity. I told you, you must go beyond sanity to buy BYND. Made an analysis, June 3, 2021. What happened since then? Total loss. Because investing in a life cycle is about dividends, potential dividends through earnings growth, buybacks, whatever. Value creation, that is what I emphasize. When you want to certainly reach your goals, you need to understand the concept of prudence. So you don't do stupid things, no matter how fast your neighbor is getting rich. Because when that getting rich reverts, you're done. As would Warren Buffett say, nobody wants to get rich slowly. That's the message of the channel. We get rich surely. That's it. No other option interests us. And that is also the right mindset, to be greedy when others are fearful and to be fearful when others are greedy. I know that's so overused, but it is important to constantly remind ourselves. And I also want to thank you because I'm reading your comments, I'm getting great feedback, and I'm also learning so much from your comments, so keep commenting. Unfortunately, there is so much spam in the comments as we grow as a channel. If there is something that I don't answer, you can send me an email at investwithsven@gmail.com. Thanks for watching, I'll see you in the next video.